Well, this is an important meeting which is lined up ahead, the OPEC meeting, and especially in the light of the way oil has been on a boil last couple of months. In fact, March onwards, if you see oil prices, they have more than doubled. First, of course, there was a big crash in oil price, like many other asset prices, because of the big lockdown announced globally, hit because of pandemic. But gradually, markets started to factor in some amount of recovery and gradual opening, then discovery of the vaccine. All of that led to the sharp rebound. Speculative long positions also had a big role to play. Not only that, the inventory got adjusted, the inventory were low, and there was no major increase in production, which actually led to the prices coming in. One other big point which actually weighed on prices rising so sharply was the winter storm in US. In fact, US, which has become the net exporter now and one of the large players overall in oil market, their production, the reports are coming in that almost 30-40% kind of oil production got hit in Texas, around Texas, because of the major winter storm. So these, all these factors put together had a very sharp rally in crude oil prices in the last 1 year or so. In fact, March, April onwards. So now all eyes are on OPEC, because the oil energy markets are very strained right now, and expectations are ripe that at least some of the large oil producers like Russia or Saudi Arabia may actually go ahead and hike the production levels to calm the hot markets right now and cool it down a little bit. So prices could actually soften. The word on the street in the global energy circles is that 1.5 million barrels per day kind of production hike is not ruled out. And if that actually happens, then the prices may actually come down by some percentage points. A couple of dollars, not a whole lot, but couple of dollars. At the same time, globally, if you see, so many large major enterprises, automobile companies, logistic companies, and big conglomerates have been announcing their plans of going completely electric as far as their mobility and EVs are concerned, the fleets are concerned. So this is also likely to have some impact on the incremental demand estimates for crude going forward. But if you see, the pre-COVID levels, we were almost around 100 million barrels a day kind of pre-COVID, levels for demand. Right now, demand is hovering around 92 to 93 million barrels a day. So the estimate is that by year end, one of the large global producers like ADNOC has said that by year end we may come back to pre-COVID levels. But this time around, the factors which are playing in incremental demand taken away by EV and some production hike which comes in, it will be interesting to see where does the oil price finds its balance. Geopolitics also has a role to play, especially commentary coming in from Saudi Arabia, between Saudi Arabia and US. So geopolitics will also play its part as far as where does crude oil actually find equilibrium in the medium term. But this OPEC meet will also have its own role and its own importance in doing that.